50% US tariffs on Indian imports came into effect today. The US doubled the previous tariff rate of 25%, effective from August the 7th, as a punishment to India for purchasing Russian oil. Now, India ramped up oil imports from Russia in the wake of the Ukraine war. Russian crude oil now accounts for around 40% of India's total oil purchases, up from almost nothing prior to the war. Now, an immediate halt to Russian oil purchases is considered economically infeasible. If India, the world's third largest oil importer, were to stop buying Russian oil, global crude oil prices could surge above $200 a barrel, and India would lose the discount that Russian oil currently offers. WTI crude currently trades around $65 a barrel. Now, the 50% tariff level on India is among the highest applied. A 50% tariff also is applied to Brazilian imports by President Trump. Now, the US is India's largest export market. India exported $87.3 billion worth of goods to the US last year. Now, the 50% tariff could see Indian exports slashed by 40% this April to March fiscal year alone. The levies could drag GDP below the 6% level, currently forecast growth at 6.5%. Now, the industries most affected include jewelry, textile, footwear, and chemical industries. These are industries which are labor intensive and could put thousands of jobs at risk. Now, there are some exemptions for steel, aluminium, copper, and other goods under reciprocal trade programs. In response, India has pledged financial aid to businesses, including subsidies on bank loans and support for diversification. It's also identified 50 countries to which it could boost exports to. Even if India is able to get some tariffs from the US reversed, several consequences could linger. Now, the Indian rupee is falling for a fifth straight session, reflecting concerns over the impact on the Indian economy. The Sensex closed 1% lower.